Hey everyone, my name's Andy. My channel is Finding Value, and I wanted to touch on some things. When I talk about companies and ones that I like, my time frame and kind of what leads to this presentation, my time frame is a long-term time frame. It's a long-term perspective. When I look at charts, I look at the big picture view, and I'll give you some examples of what I look at and how things align, but I look at the big picture, and I make judgments based off of on commodity companies. It's more about the sector valuation, not necessarily the individual company itself. I do look at, if it's a developing company, are they spending their G&A, general administrative expenses, okay? Do they have good insider ownership in terms of stockholders themselves? Is the management team, have they done it before, et cetera, et cetera, et cetera? So I look at that. I look at the big picture view. I look at the sector valuations, and then I say this is a good company for the right hire in commodities. But that's all from a long-term time frame. I know I might say I like this company. Someone goes out and buys it that second, but in the short term, it comes back down, and they're like, "Man, this guy doesn't. What the heck?" So big long-term pictures is what I view things in. My time frame is the entire commodity bull market. A lot of people will take something, they'll buy it, they go down 30%, and they say, this is a garbage stock, I don't ever want to own it again. And you just bought it at the wrong time. Or you didn't cost average in, or you didn't use good portfolio allocation. There's a lot of things that you have to tie together to be successful in investing. Portfolio allocation is what basically manages my risk for each position sizing. Then I look at the charts to try to get the best entry points. Doesn't mean that you'll be successful at doing it, but that's all you can do. You can look at the chart, say, I think this is a good entry point. Let's go in here. Now, another thing that we can do, so you have portfolio allocation, you try to time your things, and then you want to get, if you can get the alignment where your timeframes are all pointing in the positive direction. So you have the short term, the medium term, and the long term, all turning and coming on up at the same time. And I'll show you what that looks like in a couple of slides here. But time frames are important because when I talk about companies, I'm talking about the big long-term time frame. I'm not talking about the short term. So you could have these things, you could have a very good looking chart on the long term, and in the short term, you could have these big pullbacks. It could be a normal pullback in a big secular bull market. Now, a lot of channels, they focus on the very short term. There's two cycles that happen. There's multiple cycles, but I'm going to talk about two cycles and how people talk about cycles. There's the secular big move. The secular move is a move that lasts longer than like 10 years. It's a 10, 15, 20-year cycle. We've had a secular cycle in declining interest rates since 1980. That's a big secular move. In those secular moves, you have cyclical with the C moves. So secular is with an S, S-E-C-U-L-R-A, and then cyclical. Cyclical is a move that goes up and down, but the secular is the uptrend that it's in. So you've got these secular moves going up and down on an uptrend, or you've got a secular move going on a downtrend. I'm looking at the secular big picture moves. The cyclical moves that are within the big secular move, the smaller cycles, is what a lot of people really focus on. And then some people, they get into these micro like moves, and at that point, it's whatever the market, you're at the whim of whatever the market's doing. Now, short-term movements and charting, in my opinion, are less reliable than the longer time frame charts. The longer you get in terms of time frame, the more reliable the chart is, but it takes longer to play out. I like playing the highest probability and then the bigger charts because they are far more reliable, and it's much easier to invest because you can invest, you can go work, and you don't have to worry about it. The short-term noise, the movements, the short-term, very short-term movements, I don't play really anything with that. You can play cyclical moves, which might be a couple year, like a 6-month or a year-long time frame. You can play those moves. It's called swing trading, basically. You can play those, go in and out, but more than likely, I like the big picture stuff. I use the cyclical pullbacks as adding points, and I use the secular trend to make me the money, the big money. And I try to buy at bottom of the cyclical move. If you can time this all together, it's an amazing return because you have everything working for you. Everybody's going to pile in. You're going to get these people chasing price, the FOMO, and at the ends of the big secular moves and cyclical, if they all align at the top, you get these big blow-off tops. So I'm going to go in. I'm going to show you some charts here of a couple of different sectors and companies, and show you what some of this alignment looks like, taking different time frame views. So let's jump in. I call this timeframes. And the first one I used is GDXJ. I know we got some gold guys here. We're zoomed in here. It's about a year's worth of, a little less than a year's worth of data. I threw in this line here. It's a downtrend. We broke out of the downtrend. We pulled on back. We've got a nice big bullish engulfing here. This could go higher on the short term here. It looks pretty good. I was talking about we don't want to break back down underneath. I'll show you what that looks like on a longer term chart, but we are right here kind of testing this bottom here, and there are buyers below here. We've got this nice big bullish engulfing. I'd like to see this thing jet on higher here. Now, this is zoomed in to me. Looking at a year chart, only a year long or so, it's too far zoomed in. So I like zooming out. This is a couple of years, 2019, 2020, 2021. It's about 3-year time frame, 1, 2, 3. We've got this nice big pattern down here, trend line. Got the trend line coming up. We broke down a little bit, but we're right here we got support. If you come across here, there's support right here at about 42.50. Looking across, and I'm hoping this thing can pull back up here. Now, the market conditions are supporting a move higher. But in the very short term, maybe we do have problems. It's hard to say on the very short term, but in the big picture view, where real estate's at, where commodities are all breaking their long-term patterns, I think gold is inclined to go higher because of those market conditions. So I'm looking for a move higher. But I'm looking at support lines to see what we break and how far down we're going. So this is a medium-term time frame. Now, a long-term time frame is when you take the big picture view. This is the view I really, really like because it gives you the perspective that I think you need as an investor. And when you got this big downtrend line, you break it, then you can see the momentum. It went from a downward momentum movement to a sideways accumulation phase. Now we're working on this upward movement. We can see the 50-day coming down, the 50-day flattening out, the blue line, the 50-day moving average, and then it's the average of the last 50 days. And now we're turning back up. So we're going into an uptrend. We broke out and we're kind of coming back and back testing somewhere in this area, I think. We've got a lot of hits in here. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, a whole bunch there. So I think this is a good trend line to use. And I think we've got some support. So we might come back and kiss it one last time. But kiss it goodbye as we move on higher, hopefully. But this looks like it's a good, this tells you that the overall big picture momentum down, sideways, and we're trying to turn back up for momentum. I think this looks fantastic on a big picture view. Medium term, yeah, we're coming into some pressure, but we do still have some resistance coming across here. And then over here, on the short term, we do have a bullish engulfing. So the alignment's pretty good. It's pretty good here. I don't see anything that's too bad. Now, REMX is another one that I recently put a good amount of money in. I did it at around $80, slightly above 80. And I got a good chunk in there, but because of what I'm looking at here, on the long term, you've got this big downtrend, you've got the flattening out, and now we're coming into an uptrend, just breaking this accumulation phase. I think this could run quite a bit higher. And again, this is only financial education. It's not financial advice. I'm just showing you charts and telling you what I'm doing. Now here's REMX in a medium-term view. It broke this downtrend line. This would have been a great entry point right here if you were watching REMX. Nice big accumulation phase. Broke to the upside, and then it basically consolidated here. And I think we're going to see a move on higher. So big picture view, this is an accumulation phase kind of breaking out. medium-term view, an accumulation phase that's breaking out, and then a short-term phase, an accumulation I should say a consolidation phase, and then we're breaking on out to the upside. Obviously, it may not go straight higher, but it's going to move in a fashion that's in an uptrend. And we broke this pattern here. So I think it looks pretty good. Hopefully it continues higher. But that's how I look at these things from a long-term perspective, a medium-term, and then a short-term. Peabody Energy, I'm just going over this because I know we had a lot of people talk about it in the comment section. This is a kind of a consolidation accumulation phase in here. We broke to the upside, and just watch which way this thing breaks. We're kind of coming into an ascending wedge pattern. If we break to the upside, it's all good. If you break to the downside, watch out. I just wanted to mention that. And I do not hold anything in BTU. Here's natural gas. Here's the downtrend line. I also wanted to touch on this. It's just starting to peak out. We broke this big long-term weekly downtrend on natural gas. That is a big deal here. We are seeing, on a big long-term perspective, we're seeing oil break out, natural gas break out, copper already broke out, all the agricultural products broke out. The whole CRB index is lifting higher. So what I'm expecting is I'm looking for that dollar to fall. I'm looking for dollar weakness so all these things can just massively launch higher. Now, this isn't going to be good for the normal person. It's not going to be good for people out there paying more in natural gas to heat their house, more in filling up their cars, more on buying houses because, one, house prices are higher, but your interest rates are going to go higher too. Prices across the board in terms of food and all your products that you're going to buy are going to cost more money, as I think the dollar is going to come under pressure. And we're getting all of this alignment here on a big picture view of every single commodity. The uranium companies are doing it. Natural gas and oil are doing it. Agricultural companies are doing it. Fertilizer companies are doing it. Copper companies, everything. All putting in these massive bottoms. And now it's just twiddling thumbs and waiting for our investments to follow. Now, we're going to have short-term pullbacks because I'm talking about the big picture time frame view. The big picture view looks fantastic. Now, the short-term needs to work its way out a little bit, and I think they could be offloading inventories, China, offloading their copper, whatever. It's not going to last very long. So they're depressing it a little bit, and if they shut the economy down, you know what? If everything comes down, I don't know if they're going to do that. I'm just saying if they do, and we see a pullback, it's going to be a buying opportunity because these things are going to bounce back like they did last time in 2020, and they're just going to give us better buying opportunities. But I'm holding this stuff. I'm holding on. I'm twiddling my thumbs, clicking refresh on the portfolio during the trading day, and hoping these things do very well. And I think they will. I think they'll continue to do well. We're just breaking out of these big patterns. If you guys like this content, give me a thumbs up. Thanks for listening. This is Finding Value.